probability trading strategy, you're full of crap.
Things aren't working, then that's a quick trip to the poorhouse.
To learn how to drive the beater before you can drive the Lamborghini.
Now you're playing with the house's money.
Wow, guys, have you ever followed all the advice, stuck with the rules, stayed calm, only to find you're still losing money? I know I have. And I get really, where does patience come in and perseverance come in? So, what if I told you that Mike and I are going to identify 5 different myths that you need to basically take action on right now so you can flip the script going into 2025? So, this is the big 5 for 25. So, Mike, we already talked about that. Mike, good morning.
Yeah, good morning, Dennis. How you feeling?
I'm feeling good, man. I'm feeling real energized. I spent the whole weekend down at the beach, down at Coalina. My wife and I having a good time, probably eating too much, but we had a really great time together. We so enjoy each other's company. We watched the sunset and talked about our plans for the future. So you know, you and I are both very passionate about trading. We love to trade, right?
Yep.
And right now, you were just sharing with me, you're really strong. You getting some strong returns this year in your accounts. One account up almost 100%, the other one up a little bit over 20, and I'm doing kind of the same thing. So, so why do you think it's important that people want to basically? Why do you think it's important that they take action on debunking these myths or these false beliefs that they have?
Oh, sure. Well, because these false myths and these false beliefs act like chains around your ankles, basically holding you in jail, in a financial mental prison, if you will. And the only way to get unshackled is to cut those chains. Otherwise you're stuck.
Yeah.
Go ahead.
No, I was going to say they need to cut the chains, but then also let go of the chains.
That's a good one. Yeah, because so often, we could just want to hold on to what's been familiar. And that's the thing with any belief that we have. If we fight to keep it, guess what? That's what you get. You get to keep it.
Yeah, it's like what is that old adage about? If you keep doing the same thing, expecting different results, that's the first sign of insanity, because it is. I mean, it's so funny we can get in such a groove of or a thought habit of, oh darn, there it goes again. I just, another losing trade, another loss, losing too much money. And there's things people can do to alleviate that. And so, I want to welcome everybody here who's joining us today. And Mike and I encourage you guys to let people know about this podcast. We're continuing to grow. We've had some great guests on so far this year. Have some great guests lined up for next year. And so, but let's jump into myth number 1, that we're talking about, and myth number 1 is, I guess we'd have to say it's confusion about, our rules. Because Ed Seykota said, win or lose, everybody gets what they want out of the market. Now, Seykota's wisdom showed that rigid rule following doesn't account for market adaptability and individual goals. So what the heck is Ed talking about with that, Mike? Because that was one that you threw out as a myth that you think is a critical thing to get over.
Yeah, absolutely. And there's another thing that Ed said too, where the rule number 1, follow the rules, and then I think it was rule number 5, know when to break them.
Okay.
All right. So what does all that mean? Well, there's a couple of rules that I think that are almost like your 10 commandments, right? Like you can't
Yeah.
break these, period. Then
Right.
you have other rules where they're a little bit more malleable. For example, you should cut losses. I think that
Yes.
that's one of the commandments. Well, one of the trading commandments: "Thou shalt not, or thou shalt cut thy losses."
Okay.
Sure.
Okay. I like that.
But if you were reading something like O'Neill's work, which we're both very familiar with, he would cut losses at 7 or 8%. Well, should that always be the case?
Yeah.
Right? You could cut losses. Some people might want to cut their losses at 10%. Some people might want to cut their losses at 5%. I think that there's different places to cut losses. Here's another one that I had and I thought was a commandment, but it turned out to be one of these ones where you would adjust it.
Okay.
And the rule was that once I raise a stop, to never lower the stop.
Okay.
And that's one that I've adjusted in the relative recent past, a couple of years. Now, here's why. Here, this is a little bit of an advanced technique. So you know how sometimes you're in a trade, you have your stop at a certain spot. Let's say that you raise your stop to X, and price is gapping down the next day, and it's gapping below your where you were planning to cut that loss.
Okay.
I used to just be like, okay, I'm gonna sell the moment the market opens. What I've done that's been very helpful is see pre-market. Okay, price is gapping down and it's trading around this newer level. Where's the most? Where's support? Is it trading just at some sort of major support area? Right. Let's say that it gaps down and it's sitting right at the 200-day moving average.
Okay.
Well, I might be able to take my stop off temporarily and see, does price bounce? And at the same time, figure out, well, if price doesn't bounce, where am I going to cut it there? Because at that point, it's already a sunk cost.
Right. Right.
Right? Price is gapping down, it's already a sunk cost. So if I allow myself to play for a potential bounce, I might be able to get in for a rally. I might be able to even be able to add in some circumstances. So
Yeah.
it's one of these things where there's a bit of nuance to the rule. And
So
yeah, go ahead.
there's nuance to the rule. At the same time, though, okay, the scenario you're describing, you have the luxury of being able to watch the market. In other words, you're watching it pre-market. You see it's going to gap down. I'm assuming you're talking about it's going to gap down below your original stop loss. I
Right,
think
right.
okay, and so then what you're doing is you're taking the action to pull off the stop temporarily
Hmm.
and wait for it to reconfigure itself. But do you have a no kidding, line in the sand saying, yeah, I'm not going to let it go any further than this? Maybe that's 20%, 15%, whatever it is. That's one question. Second question is, um, I think it's a great idea to, if you're going to gap below your stop, that can be a time you can modify or take your stop off for a second. But if I'm not watching the market and where I don't have the luxury of being in on the ability to be in for the pre-market, I'm going to go ahead and let my standing stops work for me. I mean, because that's
Oh
what
yeah,
they're
yeah, of
designed to
course.
do, right? And I
Exactly.
love the analogy of the the 10 commandments of trading. I agree with that. There are certain that you don't go against. Stop losses are one of those, for me at least. And but I was sharing with you earlier that uh, the concept of we're going to do. I would love to do a session prior to the end of the year that's called "Even God Uses Stop Losses."
Hmm. All right.
And the essence of that is he establishes these rules, if you will, our guidelines for our
Hmm.
protection, right? And typically, if you follow those guidelines, you're going to be protected. And so that's the same thing. That's what I'm calling. That's God's stop loss, partially because he's protecting us from what could happen, which is what our stop losses are supposed to do. But so blindly following the rules can be rooted in fear, which limits growth. And as you said, in your rules, okay, is this? Are you saying that some of your rules are hard and fast? This is a have to keep this rule, and other ones are more like guidances. Here's a guidance that I want to follow. You know what I'm saying?
Well, I think that cutting loss is an important rule.
Okay.
I think a lot of people have that as one of their rules that are immutable. That you have to have some sort of a loss cutting rule because, what's going to prevent us from going broke?
Yeah.
Cutting
Yeah.
losses while they're small. And there's different, depending on who you are that's listening to this, that you might cut a loss at different percentages at different times. There's many ways to skin a cat, as they say.
Yeah. Yeah.
So it's not where, oh, you have to cut it at this percentage, or no, but you do have to cut losses. You
Yeah.
also have to take significant gains. Right? Well, when
Yes.
you've got a significant gain, you need to bank it.
Okay.
What's a
And
significant gain?
yeah. And
That's for
we
you to
want
figure
to
out.
and we
Mhm.
want to save that because that might be one of the things we follow. The aspect of where to take losses, where to take gains. We may actually cover that in a later myth
Oh, okay.
today. Okay.
All right. Very good. Getting
that's
ahead of
that's
myself. My
Yeah, that's a
apologies.
little tease, everybody. Because I think that's one of the most important ones. The So how does your system, like I said, do you like it? Let me stop for a second, reorganize my thoughts. In your system, do you have it written down, the rules about the exceptions to the rules?
The rules about the exceptions to the rules. Uh, they're some yes, some no.
Okay.
Often, so a lot of the exceptions to the rules come out in post analysis.
Okay.
Um, yeah, that so there where when you're new, or when you're starting to figure out trading, I think that it's important to stick to the whatever your rule book, playbook, whatever you want to call it is,
Yeah, I
because
agree.
that's how you start to really learn the game and learn the game very well. And you might see, one of these people out like you might see Dennis or I make some like deviate from the rules, let's say just a little bit. You might be like, hey, you said to
Yeah.
follow this, and yes, you should be following the rules, but when you have a certain level of experience, you're able to know which ones you could bend, and when. And
Yeah.
sometimes it's written down. Sometimes it's not, but you know what the higher order of the rules are. Cut losses. Yes, that one I'm going to follow no matter what. Should I take this stop loss off here and reevaluate and allow it to go to the 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 lower level of support, because price is gapping down anyhow.
Sure, sure. And so I think it could kind of apply, Mike, to a lot of different things. I mean, it could be also applied to, um, perhaps position sizing, how we
Hmm.
determine how we position size. Because I have some very cut and dry rules in there. Uh, but the way I kind of work my way around it is I'll go in and I'll say, okay, at given the current market condition, I have an objective to enter an order for a quarter position to a half position. And so that
Hmm.
I've defined my leeway. Okay. If I go up to a half position, that's fine. If I do a quarter position, that's fine too, or
Hmm.
anywhere in between. So that gives me some leeway to be able to jump on the trade that way. So I think that, because both of us are, we're swing traders who follow a rule-based mechanical system. And I agree with wholeheartedly that traders, when you're first getting started, I think following your rules, sometimes for a year, 2 years, or maybe even longer, so that one, you learn to trust your rules, and also in the same time, learn how to trust yourself to follow your rules.
Mm.
That's critical. And then once and you'll know when you know that you've reached the competence level to say, okay, I can start varying my approach, my technique right now, with my rules. But like you said, always follow it up with a post trade analysis, because that is also a great way to make sure you're staying tethered to your rules and not getting too far out there in being tossed by the wind too much. You know what I'm
Oh,
saying?
yeah, yeah, totally, totally.
Yeah,
In a similar vein, I'm curious to get your perspective on this before we move on to the next myth. I
yeah,
think that it's important for people, if they're going to learn from one system or one mentor,
yeah,
that it's better to do that than to sign up for 10 different services or
yeah,
even 5 different services, because then they feel like they're getting more and more information,
yeah.
but yeah, there's too much nuance in all these things where you end up uh, almost being like a deer stuck in the headlights, or serving too many masters, if you will.
Uh,
What are your thoughts on that?
I agree with that wholeheartedly, and because I've seen it so many times where folks, well, they talk about that is find a system that fits you, but I
Right.
think that there is a human nature tendency to always to oftentimes be looking for something better. And unfortunately, when you're first learning a system, like the first 90 days to 6 months to even a year, um, you do have to fight that urge. Oh, I need, oh, it's not doing exactly what I wanted. The system's not doing exactly what I wanted to do right now. So therefore, it must be crap. I need to go on, even though they haven't taken the time to actually put the system through its paces. They're going off a short period of time and they're not looking at the full body of work. But as you said also, if you've got one person whispering in your ear, like you like the Investor Business Daily approach and all that kind of stuff, and you listen to all their webinars and all that type of thing, but then you like Mike or my process, and you're listening to us, and you kind of have put your mind in a position where it's going to be in constant conflict because the two approaches are not going to sync up all the time. So what I encourage you to do is find a system that's got an edge that has repeated multiple years of success in the stock market. Learn that and make that your objective, that your goal, not paying so much attention about what kind of money you're making. Learn it, bank it, and then and say it's going to take me 6 months to learn this system. Then after I've learned it and I'm executing it perfectly, the system, then I
Mhm.
can add on the nuances at that point, layer on. And then you can basically look at some nuances and go, well, this is crap. I don't want that in my system because it just bogs me down.
Mhm.
Okay.
Yeah, totally agree.
So cool. So perseverance, I love this. Perseverance in the wrong direction won't get you to where you want to be. Um, and do you think there's a myth out there that people believe that, well, if I just persevere and stick this out and all that kind of stuff, that they go, oh, it's going to work out? But
Oh,
but
sure.
but unfortunately, they're tied to a system or false beliefs that they're persevering in their false beliefs. So how do you ensure?
Exactly. That was my problem for a very long time, and I was stuck for a decade because
Wow.
well, one thing about me is that that I do persevere. And depending on who you talk to, you might talk to my wife or somebody else, but I think that I'm pretty patient. um, but I also think that if we're patient with the wrong plans, or if we're persevering in the wrong direction, then we're never going to get to our goals. If we have a goal of seeing the sunrise, but we're faced west, well, it's never going to happen.
Yeah,
So we need to
exactly.
make sure that we're starting with something that actually works,
Mm.
and then we can persevere. Have the goal be more like a GPS, and your system is the thing that's going to help guide you over, around, and through different obstacles as they come up. Then you can continue to persevere. But until you have the skill sets, and until you have a level of certainty that you are headed in the right direction, then you might be persevering uh, right to the poorhouse.
Okay. Yeah. Without a doubt. Well said. It's that aspect uh, of kind of like I've always proud of myself in the ability to both be persistent, that
Hmm.
I persevere, that I'm patient. But during my early part of my trading, I would get hung up on I wasn't following my rules. Okay. And for whatever reason, I wasn't persistent and patient and disciplined enough to trade my rules. But at the same time, the perseverance came through to say, kind of rules be damned. I'm going to keep pressing forward, and I don't care if I lose everything. I am going to be right with this market. I'm going to be the one who's right, and that's an ego thing, But that my perseverance was attached not to my a winning process. My perseverance was attached to I have to be right in the
Mm.
market. You know what I'm saying?
Yeah, yeah. So how did you get over that?
Well, blew up 2 accounts and then, said, probably not a good idea to do this anymore. And, and reminded myself, kind of have a little bit of a go-to checklist first thing in the morning to make sure um, that I trade during the time of the day that I'm, that I want to be trading. And I like to trade the last hour of the day or
Mm,
put in all my orders pre-market, like on Sunday, and everything's
mm,
in place. I don't have to worry about it. They're taken care of. So by doing that, I get past the issue of that becomes where I want to persevere. Persevere
mm,
in just following my discipline, following my system, following my strategies. And sometimes in the morning when I wake up, I pull, I grab my phone and I look at it and I zip through here just to see how the market's doing. One of the first things I check is I do check my daily verse, that I want to be focused on Bible verse in the morning to get me started on the right foot. But then I jump on it and I jump over and look at what the market's possibly doing. And I don't know, maybe I should stop doing that because there is occasionally a huge urge. I'll see it's going to gap down if I'm up before the market opens, or I'll have an urge to put in a trade right there because I think it's going to go in the direction I want it to go in. Unfortunately, I've been proven wrong on that so many times. Now I just gonna put it aside, don't put the order in, and say, I discipline myself to wait.
mm.
D You know? Does that help?
Yeah. Oh, yeah, yeah. Totally, totally. Yeah.
So
And the thing that I was going to say too, the thing that helped me to finally start to persevere in the right direction
yeah.
was getting other people around me,
Oh, okay,
because
yeah.
yeah, I was going off the cliff until I found the New York City IBD meetup. And when I
Right
finally
on.
got other people around that were also trading, and I was able to hear uh, other perspectives of people trading in a similar way to what I was trying to do, that's when I started to move with the pack.
Yeah, yeah. Yeah, yeah, because I think that, like I said, that perseverance is kind of a two-edged sword in that you can persevere out there by yourself, and if you're persevering by yourself, your mind's going to play games with you.
Yeah,
It's going to and I'm sure that, did your minds play games with you
of
until you
course.
found out, oh, there's other traders out there that are going through the same thing that I've gone through, and here's the way they got through it. I wonder if that path is still applicable for me.
Yep. Yeah, exactly. Lone wolves rarely make it in this game.
Yeah, yeah, I agree wholeheartedly. So, so you already talked about perseverance and the role of self-assessment, reflective practices. Any particular, self-assessment, reflective practices you do either on a daily or on a weekly basis? Maybe say on a weekly basis, just to go ahead and make sure you're on track with your perseverance.
Oh, all the time. Uh, each day, multiple times a day.
Okay.
Uh,
What do you
and
do?
the way that I do that is through prayer.
Ah, okay.
Because if uh, it's through prayer that I'm reminded of, well, what I'm supposed to be doing. Well, what I'm
Mm,
supposed to be doing is God's will. At least that's my belief. I'm not trying to
right on.
push my beliefs on anybody else, but that I find that centers me. And I
Okay.
find that the more that I remind myself, because I'll forget, I'll be distracted by shiny objects. But when
Mm,
I remind myself through prayer, and I actually have it on my calendar, like a little, like, okay, at 11 a.m., pray. At 1 p.m., pray. At
yeah,
3 o'clock, pray. That's all, like I'll
that's
drop what
cool.
I'm doing, uh, pray for a couple of minutes, and then on with the whatever I'm carrying on with. But that reset helps me to get back on track, and I'm less likely to start to go off on some random path.
Okay, so you're less likely to self-destruct.
Yes.
Okay, cool. Yeah, I love that because I kind of follow a similar path. Although I have it, alert or not alerts, but alarms on my phone that
Hmm.
will go off at various times during the day, and it just
Hmm.
tells me, hey, take some time.
Hmm.
Say a prayer, read a verse, all that kind of stuff. Because we have similar beliefs with our Christianity and all that kind of stuff, and I agree wholeheartedly with all of that. That for me at least, it's got to be a big part of not just that's a big part of my life, my walk with God.
Hmm.
And then it spills over the over into everything else I do. My relationship with my wife, number 2, my relationship with my kids, my grandkids, and all that kind of stuff.
Hmm.
That's the next priority. And then into my business relationships, trading relationships. It all spills over because I really firmly believe that my favorite verse, Proverbs 3:5 through 10. I won't give you the whole thing, but the first part of it starts off with trust in the Lord with all your heart. Lean not on your own understanding,
Hmm.
because I know in my life when I've leaned on my understanding, oh man, did I mess up? Because I tend to not understand things as they are. So cool. Hey, let's jump into some more myths. And Aaron, if you're ready to transform your trading journey, I want you guys to take a look. These make wonderful Christmas gifts. You got to get on this book list. One of them is the trading. Let me get that where it's not. There we go. There we go.
There you go.
Trading mind wheel. And the other one is my little book here called Trade Your Way to Freedom. There we go. Uh,
And
Retire early with enough money and no fear. So both Mike, yeah, these are over on Amazon, guys, and we'll put a link in the description on the YouTube channel and over on podcast if we can do that. So again, Christmas gift for anyone who's looking to master the markets. Get your copies today, and uh, and we would appreciate it. Is maybe you just know somebody else out there that wants to learn about trading, and I know I suggest Mike's book and my book for anybody who wants to learn about trading, and it shows me how interested they are if they read the book and then come back to me and start asking questions. At least they'll ask smarter questions. So
yeah. Oh my goodness. Yeah, questions are the answer. I've heard that uttered so many times from so many smart people. It really is. The better
yeah,
questions we could ask, the more doors we can unlock.
and so the next myth is This is a myth from Mike Tyson. I'm not sure, but Mike Tyson says everybody has a plan until you get punched in the face, right,
Hmm.
or punched in the mouth. And this one is staying calm under pressure is vital, but it won't replace preparation and skill. So, you know, are all the challenges we have in trading just in our head?
No, not even
Okay.
close. Um, yeah, so there's uh, and this is where it's really the one of the big reasons why I put together the trading mind wheel, because there's these 8 skills where if we're lacking skills, then we're not going to be able to operate. And being calm and cool and collected, yet those things are great, those things are important, but if you don't have the skills, being
Mm,
calm and cool and collected while your life savings is getting flushed down the toilet, it's not going to help it come back.
yeah, right. Exactly. And so,
So, yeah, you've got to learn the skills. You have to learn what you're doing, and if you are doing the wrong things, yeah, being calm is not going to help you.
okay. One of the things, well, how do you learn the skills? Because I know that one of the things that Mark Douglas said. Mark Douglas and his wife in the Disciplined Trader book and manual that they talk about is they suggest that in order to really learn a system, you need to do 400 trades.
Okay.
Now, 400 trades, they can be and they so if you do 400 trades, let's say you trade, you know, 4 times a week. You do have
Mm,
4 trades per week.
okay.
Well, then to do 400 trades, it's going to take you what, 100 weeks. So that's almost 2 years worth of effort. One of the things that we can do to accelerate that, because I think once you achieve that level of number of trades, it becomes so ingrained in you, especially if you're trading a system with an edge, with a proper, a really strong setup and then trigger for the particular trades that you're looking for. Because my other thing Mark says is only pick one. Both Mark Minoviti and Mark Douglas talked about just pick one setup and just get really master that. So if you do that, but anyway, 400 trades, 2 years worth of effort, or learn how to, like I like to trade the Thinkorswim platform, and they have on their platform a on-demand feature where I can go back and I can simulate trades uh, going back, if I want to, on the S&P all the way back to 1929. Okay,
Wow.
that should give me enough practice along the way, and then just keep track, just going through, day by day by day by day, just running it through. And if I can do 4.5 trade, practiced or simulated trades per day, within
Mhm.
90 days, and within 90 days, I will have achieved 2 years worth of experience on doing live trades.
Hmm.
And the sports psychologists say if we can imagine it and if we can go through the process, even if it's simulated, it's just like the real thing, at least inside our mind. Um,
Hmm.
and so that's one of the areas with this, it's all in your head aspect, is because I think that oftentimes, and one of the reasons why traders chase the holy grail of trading is because they haven't developed the confidence in their system with an edge,
Hmm.
and they haven't developed the confidence in themselves to follow that, and often follow the system with an edge. And so they basically are stuck with inconsistent behavior, or it's inconsistent results, but maybe it's consistent behavior for maybe some deeper things in them that they need to, get straightened out before they can push into trading. In other words, there may be underlying baggage that results in, as an example, they may go, well, I'm always a loser, or oh, there it goes again, the system's falling apart, that's the fifth system I've tried. But
Hmm.
none of the system did they take the time really to get in and make it part of who they are. Well,
Well, sure.
that was pretty heavy, but like dissected, tear it apart, Mike, or what? Tell me what you think about it.
Well, that's why the first 80 or so pages of the Trading Mind Wheel are all dedicated to mindset and beliefs, and digging into that sort of stuff. And it's why the whole notion of uh, every other skill what we have beliefs about, right? So
Right,
that we have beliefs about journaling, we have beliefs about what we should be analyzing, how
right,
markets are going to move, how much we should risk, all that stuff. So we need to first get all that stuff out on a piece of paper, that so it's almost not like you're, if you were going to go plant a new garden, you need to till the earth first and see what's
mm,
there, get the weeds out, and then you could uh, go and get some high quality seed, read your book,
yeah,
get the high quality seed, plant the seeds. Because if we try to take your work, my work, O'Neill's work, Minervini's work,
yeah,
going on YouTube and watching some random videos, and you're trying to get seeds, but you're planting seeds in full of a plot of land that's infested with weeds. Well,
yeah,
it's what do you expect?
yeah.
You gotta,
Go ahead.
yeah. I was just gonna say you gotta till the earth before you plant the seeds.
Exactly, and I think that that's part of the deal that you were talking about earlier, where people are following multiple people at the same time. They're trying to gather their seed, but they haven't prepared their soil properly. So they're
Right.
basically, as you said, they're either throwing their seeds on top of hard soil, and it's just not
Yep.
going to go in, and the birds are going to come and eat it, or they
Yep.
thrown it onto soil that is already has weeds growing up on it, so it's competing with all these. Like if you're trying to follow the Lamborghini guy, and if you're trying to follow Mike and I, man, you're going to have some huge conflicts in your beliefs because we don't follow the same type of process, as the Lamborghini guy, and so part of the deal is just to make sure your soil's prepared, and part of that preparation becomes a comes with it a willingness to challenge all the beliefs that I currently have about trading and about
Hmm.
myself and about money. And what beliefs did you inherit? Oftentimes our beliefs, our objectives, and all that kind of stuff are inherited because they actually somebody else's beliefs.
Hmm.
and that can wreck you. I mean, that can wreck your trading if you're not believing what if you haven't set aside to find out what your beliefs are about trading stocks and options, then you're setting yourself up because uh, to be controlled by something that never came from you in the first place. So
Exactly.
so
That kind of
you
goes back to your point that you made a few moments ago where you were talking about questions,
yeah.
right? And if we're able to ask ourselves the right set of questions, we'll be able to unlock a lot of those doors and remove a lot of those weeds.
And Mike, and you've mentioned also is when a person's going back and kind of doing this safe self analysis of themselves. You've talked about you're kind of like peeling away the layers of an onion, and I know you've said in the past that you have to keep asking questions until you're like 3 or 4 or even 5 levels deep or layers deep in your onion. So,
Yep.
how about just walking us through, some of that, the type of question you would ask? Let's say the person refuses to use stop losses. So work through to get down to the level or the layers that will help them resolve that.
All right. So why wouldn't you want to use a stop loss? Well, just confront it that way. Well, why?
Okay. Yeah. Oh, okay. So why? So they answered that. I don't want to use a stop loss because I might miss out on a big move
Or
up.
why is that important to you? Well, why are you concerned that you might miss out on a big move?
Um, well, because in my life, I always miss out on the big moves, and and it just I'm so tired of that, and it's got to change.
Well, why do you why have you always missed out on these big moves? Why do you feel you've always missed out on these big moves? Do you have a
Uh,
plan or a system or
I don't know.
what's going
It
on?
just seems like when I was growing up, it was like all the time I was like always on a losing team, and so it's just like it's so. Yeah, and my mom and dad would tell me, it's not whether you win or lose, but it's how you play the game that counts.
Oh wow! All right. So here we are with mom and dad placing that, and that's a pretty good belief. That it's not about how you play the game, but it's not whether you win or lose, but it's how you play the game. But we end up misplacing that onto my trading. It doesn't matter if I win or lose. I'm gonna just
Yeah,
keep on playing the game.
yeah,
But well,
yeah,
so how does that? So I would then take that belief and then
yeah.
say, okay, well, what's the trading goal,
Okay, yeah. And so,
right?
and
So
guy,
so
and I want everybody to know that Mike and I just made this up. Okay, so I'm not revealing any past secrets of my own. Okay.
mm, so we have that belief. Then we have the goal, right?
Okay.
What's the trading goal,
Yeah. Well, can you also trading goal is to um, I think that's where if we go in and we define the trading goal as to making money,
right?
then that may be something that keeps the person hung up because there may be then other aspects of making money that they have hang ups on. But how do we reframe? Okay, let's say the issue for me came down to um, yeah, mom and dad said it didn't matter whether I win or lose. It's just how I play the game, and that my attitude was, well, it doesn't matter if I win or lose, but it does when you're trading. So how I think part of the objective is then how do we take that underlying belief? How do we reframe that into what do you want to do with your trading, and what are some longer term goals, but also intermediate goals that you have
Mhm.
total control over?
Right. So it. the beliefs that we have need to be in alignment with the goals that we set. Otherwise, we're not going to be able to get to the goal.
Okay. Right.
So that belief of it doesn't matter if I win or lose, it matters how I play the game. So how, well, in what way does that need to be reframed in order to get us to the goal of I want to be making money in the market and doing so consistently?
Yeah.
Well, maybe part of that ends up becoming I need to follow my rules. And on each individual trade, it doesn't matter if it's a winner or a loser. But
Okay.
sticking with how I'm playing the game gets me to the end result that I want. So I better have a good set of rules.
Exactly. And partly with that, you are reframing it in that you're not discarding the belief. It doesn't matter whether I win or lose, it's how I play the game. We're redefining how we play the game. We're going to basically redefine how we play the game to play the game based on rules that are from a system that is a system with an edge, a winning
Mhm,
system. That
exactly.
and then reframe that and again go layers deep, right? I mean, well, then why do you want to, how do you do that? And then you start setting up some intermediate goals and some incremental goals on how you can then trade a winning system consistently. And so, cool. So I hope everybody enjoyed that little bit of a psychotherapy that Mike and I just went through. So, hey, myth number 4 is, know what to buy and when to enter. Entries are not intuitive. And so relying on a gut feel, I get emails from people often. I won't say all the time, but often. And they'll usually attach a little article along with it talking about some stock, some investment, and that they've picked up from some influencer saying, "Oh, it's going to the moon. I think we should jump on board right now." But you look at the chart; it's so overextended. I wouldn't buy it with their money. And
Mm.
so, so that's part. Entries are not intuitive. And so, Mike, how do you determine what stocks/ETFs you're going to buy? What qualifies them into your short list?
Oh, so it all starts out well with a screening process, a rigorous screening process where I'm looking for the strong fundamentals first. All the
Right,
stuff that O'Neill talked about. So strong earnings, strong sales, uh, growth, uh, a game changer of a company,
right,
something that's changing the way that we live, work, and play, something that's new about it, something that the institutions like, and you
okay,
can see the fund ownership increasing quarter over quarter. Uh, those types of things, and to also see the stock be in a leading industry group and to be a leader within its industry group. When you start to line up these things, it tends to lead to higher probability selection.
right. And
So
yeah, go,
so that's already narrowing the playing field down from 10,000 to maybe about 300 or so potential candidates. And
right,
then from there, knowing, well, under what circumstances am I going to trade these 300?
okay,
And that's where I'm taking a look at the chart and I'm seeing, well, is it setting up in this kind of pattern that's telling me that, yeah, there actually is a higher probability of this thing going up at a certain time, and it's also giving me a low risk spot where if it breaks out, then okay, I'm able to be in it, but the place where I would cut the losses is this close. So that
right,
way, if I'm wrong. And look, I was looking at my stats from November. My average winner was about 16%. My average loss was only about 2.5%.
excellent.
So with
Yeah,
those, yeah, well, if you could get that's an anomaly. But my losses are generally very, very small, like that, 2, 3, 4% or so.
sure,
So the idea is to keep the losses a lot bigger, have the losses or have the losses be a lot smaller, have the winners be a lot bigger, and
right,
then if you're winning half the time, you're doing great.
Yep. So one of the things, and I use the same analogy, not the same analogy, but the same kind of concept. You're talking about individual stocks, and I like to trade the ETFs. And now
Oh yeah, sure.
there's hundreds, if not thousands, of ETFs out there, but which ones do you choose? And so I've
Mm,
selected a stable of 8 ETFs. One of
mhm,
the qualifications of those ETFs is their leveraged ETFs, their bullish leveraged ETFs is typically a 2 to 3 times leverage. They have to demonstrate that over the course of a year, they have a past track record going back sometimes 10, 11 years, where they provide compounding opportunities that will compound out at somewhere between 75 to over 100% per year. And
mhm,
so that's my criteria. And in reality, when people, suggest to me, oh, well, you need to be taking a look at this ETF or that ETF, I'll take a look, and I go, no, I don't, because I'm perfectly good. I know I have a stable of thoroughbred ETFs, 3 indexes, and five of the sectors that will perform like that in year over year, every year, every year. And then now the next thing, just really briefly on what about entries? I know I have basically one primary setup that I utilize is called the PEP routine, which is precision entry point routine, that basically looks for 3 elements.
okay.
Support, candlestick reversal, and momentum reversals, and then I have a trigger on top of that. What about you? How many setups and triggers do you utilize for your system?
Um, there's 5. I would say that most of the time I'm using 3 common ones.
Okay.
And the 3 most common tend to be pullbacks, tend to be VCPs, and the third most common one is probably the cup with handle.
Okay. What's a VCP?
A volatility contraction pattern. That's what Mark trades, Mark
Okay.
Minervini.
Okay.
Where you're starting out, you have prices volatile here, and then it progresses, and then it starts to tighten up, and then it starts to tighten up some more, and tighten up some more,
Okay.
and then on the far right side, almost all the water is wrung out of the towel, so to speak, and then it just takes a little bit of buying pressure to push the thing out.
Roger that. Okay. Cool. Yeah. So you're as again, what you just described and what I just described, we want to pass that on to everybody. Success leaves clues, and Mike has a very refined amount of setups and triggers to get into a trade. So do I, and by doing that, uh, that also allows you to be very focused and patient if you'll push yourself to wait for your setup and keep it very simple. Uh, and then Gossett Training also talked about mentoring, and I agree with that also. So, Mike, the thing about it is, okay, we've talked about all these great myths and all kind of stuff and how to debunk them and all that type of thing. Um, but I think one of the most important aspects that took me a long time to grapple with is knowing when to exit a trade for success. So,
Mhm,
exits are where traders make or break their profits. And we want to debunk this. Does it matter where you exit? Emotional exits often result in losses or missed gains.
mhm,
And so how do you trigger? I've heard some people say, well, I know when I first started trading, I would watch a stock take off and it'd get up 10%, 20%, 30%, but I didn't have a plan. And so
mhm,
then it would guess what? It would come back down to where it was up only 10%, and then it would drop to up only 5%, and then drop to 0% up. and then it would
Yep.
start falling 5% down, 10% down, 20% down. And I'd sit there and go, well, do I sell it now?
Yeah. Yeah. I've been
And
there. Been there, done that. Have the T-shirt.
yeah, without a doubt. And so, what I find is that this is one of those where when you're first getting started, learn how to be a winner. And
Hmm.
how do you learn how to be a winner? Well, set a 2-to-1 risk reward ratio and just follow it religiously for a
Hmm.
while. 90 days to 6 months or that kind of stuff, where you're going to risk $1 to make $2. Or you can say, hey, I'm going to have a 5% stop loss, and my profit target is 10% initially, and just learn to be a winner and then expand from there. So that takes care of learning to be a winner. What techniques do you use in that area?
Hmm.
And do you think this is how important a myth is it to know when, have that plan when to exit your trades?
I think that it's very important to know when to exit your trades. Well, when I was first studying O'Neill, it dawned on me maybe about a year or two in that O'Neill was using a ratio of 3 to 1, right?
Right.
Because he would cut his losses at 7 to 8%, and he would take most of his gains at 20 to 25%. So 3 to 1 reward to risk. And then that's when the whole risk to reward ratio notion started to come into play. And then at the time, I was thinking, well, I need to take profits at 20%. Okay, so I'll take profits there. And then I would just cut the loss at 7%. So I would let this thing bounce around until, one of those things hit. And it turned out that wasn't good enough for me. I
Okay.
ran into a variety of problems with just having uh, two ways to sell. I needed I ended up having four ways to sell. That's what I have now.
Okay. What are those?
So one is selling into strength and planning the spots on when to sell into strength.
Okay.
Um, so the different targets, so 10%, 15%, 20%, well, whatever, and you're figuring that part out.
Right.
Then I also have the stop loss in place, and I figure what that's going to be before I even enter the trade.
Right.
Then I have what I call danger signal exits,
Okay.
where there's a variety of danger signals that I look for that tell me if momentum is starting to come out of a trade. And if you get too many, it tips over the boat, and the odds of success on this one start to fade.
Right.
So that takes me out of a trade. And then the fourth way is when price runs up and then it starts to build a floor of level of support, then I'll raise my stop below that level of support. And if it starts to fall through the floor, well, you shouldn't fall through the floor. You walk up a flight of stairs, it should be nice and firm. If you
Sure.
start falling
Yeah.
through the floor, pull the parachute.
Exactly. Yeah. No, I agree with that wholeheartedly, and that's and the for what I have in my coaching and all that kind of stuff and mentoring sessions, we implement and get up to the point where there are multiple levels to exit at. Uh, One of the reasons why I chose 10% as the initial target, or learn how to take 10% off the table first, is that the the probabilities of hitting 10% return are greater than the probabilities of hitting 20%.
Of
So
course.
what I'm trying to do is one, encourage people to one, follow a set of rules. And
Hmm.
then once you get established in your set of rules, and you're, because winning begats winning, I think. The more you win, the more you then start expecting to win, and also expecting yourself to follow the rules. As a follow on, what we do is is one of the things that, as you call them, danger signals or approaching levels. I would say that'd be including approaching levels of past resistance. Um,
Hmm.
if past resistance is only up 9% from where you open your trade at, well, by having your first profit target at 10%, guess what? There's other people watching that price action, and that resistance at 9% may never be broken. So this is one of those situations where I would amend or modify my exit to say, well, I'm going to get out on strength at 8.5%.
Yeah,
Th- th-
that's a good
That,
idea.
okay. And then let's say we blow on past, and then we've got ourselves adjusted where I would typically take profits at 10%, 20%, and then let the rest of it slide on a trailing stop, which works really good. It's a percentage trailing stop, and it adjusts itself automatically up. You can only go up, uh, and so we adjust for the automatic stop that way. However, I may look at my charts technically and find that, okay, well, but my technical resistance or my technical target is, let's say, 25% away. Well, I won't expand that profit target up to total of 25%, but I may go over 20% up to, let's say, 22 and a half or 23 or even 24%. And that way, if I'm compounding, that improves my compounding factor for my portfolio.
Mm.
And that works really well, but it sounds like it meshes very nicely with what, how you are, working your exits also. It's very
Yeah,
similar.
yeah, being having that extra level of flexibility to trade what's there on the chart.
Exactly. Yeah. And so, anyway, hey guys, we've covered a lot today with the 5 things, adapt your rules when necessary, and when you when you've earned the right to adapt your rules. And sometimes that may take 9 months, or correction, 3 months, a year, 6 months, of strictly following your initial rules. Persevere, but only in the right direction.
Mm.
Build your skills to complement your mindset, and let then your mindset help you build your skills. Use systems to master entries and then master exits to lock in your success. So, Mike, any last and finals for us?
Yeah, no, just to for everybody that's here, thank you for being with us for the hour. It's been fantastic. Yeah, make sure that you subscribe to the Trading Truths podcast for all the weekly insights into uh not blowing up your account, but to blow up market myths
Right
and
on.
to unlock your trading potential. So
So, I agree with that wholeheartedly, and I encourage you also share this episode with someone who wants to succeed in 2025, and so we can all flip the script together. So I'll say aloha and God bless everybody.
take care. God bless.